Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Serge Berger on the line. He is head trader and investment strategist at the Steady Trader. Good morning, Serge. How you doing today?
Hey, good morning, Joel. Happy Monday.
Yep, thanks for coming on. Well, when we talked to you last Monday, you kind of wanted to see what the Fed was going to do here before you actually trimmed your some of your positions down and had a little bit more cash. Well, now we got the decision from the Fed here. What's your thoughts?
Well, I think, I laid out two scenarios last week going into Wednesday. One of them was that they remain dovish and it remains status quo. The other one would have been that they are sort of politically motivated or forced to raise come hell or high water. And obviously, it was the former that happened. We saw the reaction one would expect, which is equities higher. Bond yields basically compressing a little bit and the dollar going lower. So, you know, we remain in the same situation. I don't think anything has changed as such, and I remain on basically on hold, just kind of watching this and waiting for some of this volatility we've seen in other asset classes to finally trickle over into equities because it will happen.
Okay, we're getting a nice rally this morning here off a potential Greek deal. Bumped up right into Thursdays and Fridays high here so far in the pre-market.
hmm
I mean, is this, is the potential deal going to be enough? I mean, we are coming up near the top of the trading range here. Is this finally, if we can put grease behind us, is something that to take us on a breakout mode?
Potentially, but I think you said something well last week when we talked, and I forgot what the stock was we talked about, and you were saying you'd be more prone to buy it on the dip as opposed to sell, as opposed to try to play the breakout, and I think it's remain in the same scenario. Yes, we could get a breakout, but it's low momentum, it's divergences all over the place. So, I'm just more prone to buy something that's really beaten up for a trade as opposed to try to break higher.
And I think were we talking to you about Walmart? Was that something that you
Yeah.
were starting to nibble at here?
hmm
Boy, big decline here. I mean, at least you got a tradable low in here, that double bottom. Do you think you're talking about things beaten up? I think Walmart fits that.
Yeah, absolutely, exactly, and it's the kind of stuff I'm looking at. It's not very sexy, but it might work, and we're so far we're in the money a little bit on that trade. It's just the kind of stuff where I can really define my risk a little bit better. Alcoa is another one. I bought that one last week. It's got an extremely tight trading range, just getting absolutely hammered. So I just have an easier time from I guess almost through a psychological lens to sort of manage my risk there because these breakouts just haven't really happened yet. And of course, this time around could finally get one that sticks, but even so, we need to see more participation, more broadly speaking, to for any breakout to become more meaningful.
Yeah, and the Alcoa has a I mean, you just can't buy that stock without a driver, and you do have
Right.
earnings coming up on July 8th,
Yep.
so that should be interesting to see if they can stem the tide here. Actually, I was gonna hope to maybe nibble at some 12 calls over the next week or
Yep.
so. I'm gonna
I
put
think that's a good one, and in fact, I usually don't like to hold things through earnings from a trading perspective. I think we've talked about that several times. And so, this one actually, I don't mind. I've sized it right, and given what we're seeing on the charts here, among other things, I'm actually wouldn't mind holding this one through the earnings. So,
all
a
right.
rarity.
Yeah, well, to most you can lose is $12, right?
Yeah,
Uh,
exactly.
all right, moving on here. You sent us a chart here, and the chart is showing the spread between the transportation index and the transportation stocks and versus the S&P 500. I'm sure you noticed some favorable ink and Barron's over the weekend on
Yeah.
the in the airline sector here. Is this one of those beaten down sectors that you think may be ready for a rebound?
Well, it's been interesting, and we've discussed the transports here, and as has everyone else, obviously, over the past few months. It's interesting. So the perspective that's more important for me than anything is that on the chart, on the lower part of the chart, I've basically taken a differential. So I took the SPY, the S&P 500 ETF, and subtracted the transports from it. And the spread at the moment, the last time we saw it at these levels was in 2007. before it then even blew even wider in 2008, right? But basically, anything over the past, sort of 6 7 years has been less. So to me, there's a decent mean reversion trade that one could try, where you buy the transports and maybe short the spies, or if you like the transports for a bounce like I do, and I actually like American Airlines for a bounce, then you could just play that and keep this in mind for perspective. It's interesting because everyone's gotten so bearish on the transports, and and I do think this is an important thing at some point over the next few months. But I think everyone's so bearish, and everyone's talking about it, that the transports probably due for a bounce.
Right, and no, I like the way that you set that up here. I mean, if the if the red goes up to where the blue is, and the blue comes down to where the red is, then you got one heck of a trade
You
going.
got to
But
trade, right?
yeah,
Exactly. It's just
yeah,
mean reversion, right? So I just like to, and it goes to the same thing I said before. I just think this environment's been so choppy. Unless you're day trading, you really got to define your risk somehow. So I'm trying to find things where I can do mean reversion stuff, and I can do stuff where I have very defined, support. So like in this case, if the transports fall below those recent lows, then all bets might be off for a while. So I can really define my risk much better at the lower end of the range than I can at the upper end of the range, if that makes sense.
do you do the index against the index? Do you do like would you do let's say $100,000 go long $100,000 worth of American Airlines, short $100,000 worth of spiders? What's your how do you work it?
Yeah, I mean, I'm actually considering two things. I'm considering essentially what I just said. Either I might do a spread trade here, where I short the SPUs and sold the SPY and buy the IYT. Um, in addition to that, what I might do is I'll just buy some American Airlines. So I might just do the ratios, or the spread, or the spread trade a little bit smaller size, so I can then do the other trade as well. I don't want to be too exposed to this trade, right? But I like the American Airlines setup as well.
And I guess for your time frame on this, if it goes your way, the longer you'll be at it, and if it goes against you, you hit your exit button and
Yeah,
reevaluate. And
pretty
yeah,
pretty much. I mean, I just don't think this is something you need to lean out of any windows for. But I have no problem staying in this for a couple weeks. Look, at the end of the day, it all depends on the rate of change for one, and the direction in which it goes, right? It's that simple.
Serge, got a question here. Rob Hood out of the chat. Just wanted to get your technical take on MXIM, and just based on the symbols here, it's Maxim Integrated Products Incorporated here. Stock has had a nice run. Rob Hood brings up these charts a lot here. I guess he
Hmm.
wants to see if we can get continued follow through here through this $36 level. Any
Yeah.
takes on MXIM?
So I don't know the stock specifically. I'm just gonna have to go by the charts here. But what I will tell you is that this is exactly the type of chart we've seen all year that basically stops going up just about now. So that's sort of just to my point. That's been the problem. We've had a lot. Look at Facebook, for example. Had so many rally attempts that just haven't followed through. Maybe we finally get one here, but it's the same thing in this stock. So by all means, give it. I mean, I see what you're seeing. There's a really good support of the 200 day. We had a big long bullish candle on the 24th of April, and then the nice rally on Friday. I don't know if there was a new specific thing there. It's breaking past the downtrend from March. I see what you're seeing, and I get it. I would usually chase this thing higher too. But again, keep in mind the broader market situation, where every rally just continues to get faded and every dip gets bought. So we're range bound, and you can probably do this. I would just make sure you do it in fairly comfortable size. Like, I wouldn't make this a massive trade.
Not looking at this one here, Rob Hood. I mean, first I'd be keeping a high on from Friday, which was 35.81. Certainly want to see some follow through on that, but to
Right.
me, the big level in this thing is you have 3, 4 highs. Well, you got an exact double top at 36.37. You also have another high at 36.10. So danger Will Robinson over that $36 level. Let's keep an eye
Yeah.
on that. Serge, let's just touch on the financials here a little bit. Little bit of pause in the action on Friday. I don't know if they were just taking profits on the triple wedge here, but looking at the XLF here, the
Mm.
Spider Select Financial ETF. Any thoughts on that?
It was quite funky, and actually, I I do this like Sunday write up for all clients, and I discussed that. When the funny thing is, right now, uh, look at where we opened. We're right back above 25. So that little late Friday dump was definitely quad witch stuff. But the financials continue to hold in there, and to reiterate what I've said over the past few weeks, the relative strength and absolute strength in the financials are to be respected. I think that's just a plain fact. So until these things start turning lower, I have a really hard time getting ultra bearish on the market, and it's that simple. I don't like to go against the financials. Look at even the even healthcare it continues to hold up this against all odds. What's interesting is, I don't know if you guys look at the broker dealers a lot, but or talk about it on the show, but that's always an interesting one to follow. Those guys are holding in there as well. So I would just watch those kind of sectors to not fight the tape.
Uh, you mentioned the healthcare sector here, and are you following what's going on in the health insurers here? I don't know if it's the court ruling coming up that's getting people a little bit skittish or whatnot, but man, oh man, oh man, the Cigna, Humana got things kicked off. Now they're kind of being left out in the doghouse. Five major players in the industry. Who's going to get left out in the cold?
I don't know.
Okay.
I don't know. It's my problem, quote unquote, in healthcare, in the kind of space you just mentioned, those kind of Cigna and Humana names, is that it's so much of the new of the way the stock moves is essentially related to, like, legislation stuff, right? And I don't like the trade stuff that, like, I can wake up in the morning and Obama signed a bill, and it was either good or bad for these things, and you get massive spikes in either direction. What I do see is the broader trend, and healthcare is an important part of the market. And it just, if you're a trend follower, you have got to respect this. 50-day moving average, simple stuff. 100-day moving average are really working well in this thing. So why would you fight that? In addition to that, you can always go back to the biotechs, which are, I think, an important psychological part of this stuff. And nice breakout last week, continuation this morning. You just can't disrespect that. It just goes to this whole point of not fighting trends. It's
Right,
that's
right.
the bigger thing.
You
What do
know,
you think about Biogen, by the way? Do you guys have an opinion on that?
is I was looking at this IBB for a long time. The Biogen here, finally broke out above 400 here. It's been the laggard.
Uh,
I kind of like this one. I kind of wish I'd been
uh,
looking at it when it broke above 500, but this one's moving up nicely here. Look at this, boy. Since it broke out of 400, boy, this had. I just don't like the gap and go, the gap and
yeah,
go, and the gap and
I
go
agree.
here, but. Let's see if we can find anything. Wow, that thing finally made a move. That was in the doghouse. I was wondering with the IBB, bumping up against that resistance if when it was
Well, there's
going to.
been major divergences between the IBB itself and biotech, and hence also a lot of the names within the IBB and Biogen. So to me, it was good. It was good, again, mean reversion play. Catch up play, mean reversion play. I can define my risk better there than I can by trying to chase something higher. Again, same type of methodology there.
Yeah, interesting. Let's see if it can fill the gap here. You've hit
Yeah.
418.82 here in today's session. A lot of times you see the gap fill and then a slight pause. You need to go up to 421. That was the low on April 23rd to fill the gap. Serge, any final thoughts here? Doesn't look like we're willing to give anything back here. S&P futures trading up 19 and a half points. Pre-market high 21.18, right up there at Thursdays and Fridays highs. Any words of advice for our investors and traders before we end the segment?
Sure. I'd say two quick things. First of all, keep in mind that Monday morning after quant witching or after any options expiration actually tends to be a little bit of the hangover effect. So, traders need to sort of readjust their positions and roll over and stuff like that. So you might have some of that the first couple hours today. I wouldn't take the price action with, too serious. And second is the whole Greek thing. It's headline risk, but I would for U.S. centric investors, I would kind of shrug it off beyond that. It continues to be one day stories, which is one of the reasons to be maybe a little bit suspect of this morning's 19 handle rally.
Yeah, just stick with your game plan, right?
Stick with the game plan.
Okay. Serge Berger, head trader and investment strategist at the Steady Trader, giving us a very good look at the transportation index, especially in comparison to the S&P 500 here. So that's definitely a trade that we will keep an eye on. Thanks for joining us, Serge. Have a great day. We'll talk to you again next Monday.
Thanks, guys. Take care.